welcome to Now Hangouts with me, Ankita Saxena, a brand new show for the young and the restless. We bring to you some of the most meaningful conversations from influencers, experts and leaders, the latest trends and what's hot in the market. From fun chats to new gadget launches to all things zellennials, we bring to you all that matters to Gen Next. And well, my first guest on the show is someone who has helped the rich people get richer while being a management consultant at KPMG, but now he helps the common man manage their money through his social media platforms. Now, this millennial has over 4.8 million followers across his social media platform. He is also the founder of the 1% Club, a community and academy to help people take more financially sound decisions. Now, he is popularly known as Finance with Sharan, aka Sharan Hegde. Sharan Hegde, welcome to ET Now Hangouts.
My pleasure. Thanks for having me.
So Sharan, tell us about your journey as a content creator. I mean, you were a management consultant at KPMG.
That's right.
What prompted you? What was that moment of epiphany like, when did you decide to take the road less taken?
I think it did not begin that way. In the beginning, it was just a simple decision of improving my MBA application. So I thought, let me create some content during the lockdown so that my MBA extracurricular activities look good. But I don't expect it to, grow this big. I thought, okay, maybe like 10, 15,000 followers if I try my level best. But then it reached 100K. And then I got my MBA, whichever college I wanted. I got into Columbia. So I thought, okay, I was still like in the mindset of I'm going to MBA, right? This was just a hobby. Yeah. But then it reached 1 million followers. Then I'm like, okay, now we have something big here. Now it might make more sense to actually stay back and continue this as a full-time profession and see what other value addition I can do with this distribution. So that's how it started. It was not like I planned one day that I'm going to do this and leave my job.
Also because at that point, not a lot of people were doing finfluencing or financial influencing, as you call it now,
right.
At the point that you started. And there were a lot of additions also during that year, like a lot of new investors that were, entering the market during 2020.
Right, absolutely. I think the most people, or prior 2020, the primary source of getting finance knowledge were news channels like this.
Correct.
And to some extent YouTube videos, which were also very difficult to understand, long videos with a lot of complicated jargons and words. So I learned all of my learnings through the existing platforms available back then, including a few books and talking to experts. But then I felt like it was very difficult for the masses to understand this. And the masses, when I mean masses, I mean the 18 to 24, 25-year-old people, right, who are not being taught this in school, number one. Correct. Number two, have a lower attention span. They are not watching cable TV. They are not listening to 15, 20-minute YouTube videos.
Right.
So there was a fundamental need to kind of give bite-sized content, and nobody thought it was possible. Is it possible to explain a finance topic in 1 minute while retaining as much knowledge as possible and make it more entertaining to compete with other comedy videos on Instagram? So that's when it struck me, like, let me try to make it. And that's how it resulted in whatever I started.
Sharan, you mentioned that lot of millennials or Gen Z were watching cable TV, or they were not consuming that sort of a content.
Right.
But this show is about millennials and Gen Z, let's call them zellennials.
Yeah.
So I want to begin by asking you that, I'm hearing more and more Gen Next zellennials say that they want to retire early, like, perhaps even at the age of 40.
Right.
Because, they want to, perhaps it's the corporate fatigue that's setting in, or they want to start up, or they just want to travel. I mean, why not? Because you live only once.
Right.
So how should a 20-year-old who has just started out, how should that 20-year-old plan their finances, so that they can retire at the age of 40?
That's a great question, Ankita. And I think it boils down to what you can sacrifice. See, most people want it all. I want a big house, I want a big car, I want to go international vacations 4 to 5 times a year. Right. So you can't have it all, right? So the biggest hurdle, I would say, for young millennials today to achieving this retire early state is delaying the decision to purchase a house, right? Most people are kind of forced immediately after they get married to buy a house. And once you do that, for most people in India, because of how much we are being paid and the rising cost of real estate, which we have seen, it becomes very, very difficult to also hope to achieve retirement early, right? So it's a give and take. Either you delay your house purchase and focus on financial independence, which is also early retirement, or you say that, okay, I don't care about early retirement, I don't mind working till 60, 70, I love my work. Then you buy a house and forget about that. So it's very difficult to have both at the same time.
So basically, you need to prioritize what you want.
Yeah, it's a personal decision.
Okay, but I'll come to home buying because that
Yeah.
is one of your very, should I say, controversial tweets,
Yeah.
because it attracted a lot of attention, good and bad.
Right.
Because home buying is a more emotional decision for us Indians, especially in India.
Right.
So, now that you mentioned home buying, so should you delay home buying or should you not buy a home at all? Because more and more Zillennials are now
Yeah.
renting out spaces, right?
Right.
So, should home buying be, or for how long home buying should be delayed, or
Yeah.
should you even buy a home at all?
Yeah. So I think great question again. And I recently did this podcast with Robert Kiyosaki.
Yeah.
And a lot of people actually misunderstood him when reading his book. Because in that book, he talks about real estate. But most people confuse that thinking, okay, Robert Kiyosaki is talking about real estate, let me buy a house and live in it. And they
Yeah.
confuse that as an investment.
Yeah.
But when you buy a house for living in it, it is actually a liability because it's taking money out of your savings. But if you buy a house and give it for rent, let's say you buy an office space and give it for rent, that is earning you income. So then it becomes an asset. So most people should first understand that when you buy a house for living in it, it's not an asset, it's a liability, right? So does that mean you should never buy a house? Of course not, right? But when you should buy it is the question.
Okay.
According to me, I would not purchase a house until I hit my mid-40s at least,
Okay.
right? Because I think it is that much time is necessary to build a liquid corpus which sort of is able to generate enough returns for you, which can give you the freedom to not work or take a gap year or kind of work on your own startup. So if you want to reach that state in life, then I think at least until mid-40s you should delay the house purchase. Now I get the point about emotional decisions and all of
Yeah.
that, but that is again a personal choice.
Right. But speaking of personal choices, Sharan, everyone has a different goal, right? The
Right.
different money end goal is very different for everyone.
Right.
But the one goal that every, Zillennial perhaps has is to have fun. To
Right.
go out, party, or
Yeah.
travel. Travel these days has become
Yeah.
big. So what percentage of your income should be dedicated or allocated towards entertainment?
So I would not say it as blunt as, okay, it's 10, 15 or 20%.
Yeah.
I would say it's more about, again, see, for example, let us say I like ordering from Swiggy, right? I like online ordering because I love food. And let's say I'm making 1 lakh per month. Now, because I love ordering food so much, I might maybe allocate 20% just for ordering food. But I will sacrifice on other things. I will not buy expensive clothes. I will not buy a car,
Okay.
So it's always a give and take, right? If you're prioritizing one thing, you need to deprioritize something. You cannot have it all. So again, when it comes to, let's say, going out and partying, it's fine, right? I would not say just spend 10% on partying. It can be 20% also, provided you're sacrificing something else. So you need to understand what gives you the most ROI for your money and allocate more there instead of allocating everywhere.
So also, Sharan, we spoke about, what does a youngster do to, in order to retire early at the
Yeah.
age of 40, or for that matter, even just planning their finances. How would you go about, allocating to various asset classes, given that at this age, your risk appetite is much more than somebody who's older?
Yeah. So again, I think this cannot be only dependent on their age, and I'll tell you why. Let us say we have two 25-year-old people, two 25-year-old individuals.
Yeah.
Now, some people might assume that, okay, both of them are young, both of them can take risk, let them put 90% in equity. Now, I'll tell you why this doesn't work. Let's say one 25-year-old is now planning to go for an MBA 1 year from now, whereas another 25-year-old doesn't want to do higher education, but is planning for their marriage 5 years from now.
Yeah.
Now, as you can see, both of these guys are having very different financial goals. One person needs the money in 1 year, another person
Yeah.
needs the money in 5 years. So age has very little to do with how your asset allocation should work. Because the first individual should not even touch anything beyond an FD because the goal is just 1 year away. Whereas the second person can consider equity because the goal is 5 years away. So the
Yeah.
point I wanted to make is that age has very little to do with how much risk you can take. It's more dependent on what that money is meant for and how much later you need that money.
Okay, so but I want to talk to you about this one asset class which has garnered a lot of attention, especially from young investors, and that's cryptocurrencies.
Right.
Now, cryptocurrency, you can't deny the kind of move that crypto has given since 2020,
Right.
and with now Binance, landing in hot waters, FTX has gone belly up.
Yeah.
would you advise investing in cryptocurrency? Because even the Indian government and our central bank are exactly not huge fans of cryptocurrency.
Right.
But the youngsters are interested in this particular asset class. So should you firstly invest in cryptocurrencies? And if yes, then what percentage of your portfolio should comprise of cryptos?
Right, very interesting question, and I think crypto has been, gone through that roller coaster ride when it's love hate relationship, and whenever it's crashing, people hate it.
Yeah.
Right. So I think crypto as an asset class is firstly misunderstood, and that allure for youngsters is that it can become 5x, 10x in
It's fast
4 5
money.
years. It's fast money. So they're not investing in crypto because for the purpose of diversifying their investments. They're investing in crypto because it gives them that dopamine hit. Like 1 week later when I see it, 30% increase. 30% increase is like 10 years in FD, right? So,
but then when you're investing, when it hits the high and it goes down because it's a hugely volatile asset class,
correct.
your wealth would half of
Right.
where you bought it at.
Yeah. So it's all about understanding how much of your asset should go into crypto, right?
Correct.
Which was the second question.
Yeah.
So I think for me personally, crypto falls under alternative investments.
Okay.
Now, alternative investments has a lot of options. It could be your lease financing, P2P lending, solar project financing. So there's a lot of options. So in my book, I would say alternative investment should be like 5% of your portfolio. And in my book, 5% also includes your startup investments and all of that. It's 5%. In that 5%, you can do whatever you want in alternates. Because the main is equity, debt, gold, real estate. That's the main. 5% you can try out with alternative assets. And crypto is one of them. So anywhere from 2 to 3% of your overall net worth can be in crypto. When I mean crypto, I mean blue chip crypto that is like Bitcoin and Ethereum. I'm not talking about, as the term goes, Dogecoin, which is actually categorized under shit coins. That's the term that they use. So I'm not saying those. I'm talking about high utility, real world utility cryptocurrencies such as Ethereum and Bitcoin, just because of its brand name that it is already well adopted. So you should restrict your investments there, but not more than 2 to 3% of your portfolio. For those people who understand the space really well and are actively trading on crypto every day, for those people, I mean, I have a lot of friends who do that. I would say not more than 10 to 20% of your portfolio if you understand it really well, and that's a very big if. Most people think they understand, but they don't.
But finally, Sharan, the crackdown that SEBI has done on financial influencers, and the fact that they are pushing more and more influencers to probably either get licensed, in order to give out any information. Where do you stand on that? Do you think that is necessary, and can there be a middle ground to this?
Firstly, I think there has been a misunderstanding of what SEBI has said, right? There's a lot of interpretations being made.
Right.
Firstly, SEBI categorically said that when a financial influencer such as myself is advocating or promoting a purchase of a particular instrument, let's say I ask you to buy HDFC stock at this price, that needs to be regulated. Because financial advice is very broad. It could be as broad as me telling you, hey, your asset allocation should be this. Hey, use this app for managing your expenses. One end of the spectrum. To as broad as saying, as specific as saying, buy this stock at this price. So that definition of financial advice, again, needs to be clarified by SEBI. I don't know what they would say. But from my understanding, it is mostly to tackle the Telegram nuisance that has happened, wherein people are creating these Telegram channels and posting these fake screenshots and luring them in the hope of get rich money. And that is what SEBI wants to crack down. So I think that is a welcome move by SEBI because that was long overdue. And we all influencers are in support of that because 99% of the influencers that you see in mainstream media are on Instagram and YouTube, and we do not promote specific investment products like mutual funds or stocks. We only stick to fintech utility apps.
All right, Sharan, thank you so much for joining us, but we won't let you go just like that. We're going to play a quick rapid fire round with you. It has to be rapid and it has to be very fiery.
Okay.
Are you ready for it?
Yeah, sure.
Okay. All right. So my first question is, in order of preference, where should you put your first salary? This is in order of preference. Party, invest, or hand it over to parents, as the Indian tradition goes.
Emotionally, I would answer this emotionally, hand it over to parents.
Okay.
Then party and last invest because it's your first salary.
Right. Okay. Where should you invest your first salary?
Again, very subjective, right? But I would invest the first salary in buying gifts for my loved ones. Not for my own self and make more money because that's very subjective.
Yeah. Okay, mistakes that first-time investors should avoid.
Blindly copying your friend's portfolio and stocks, which is most people do that.
Okay.
That's how most people begin.
Okay, cautious investing or bold investing for a zillennial?
I would say neither. I would say somewhere in between. And I don't think I can make a blanket statement like that, like what you should do. But
Okay.
cautious for sure. I would lean more towards the cautious side because that financial discipline of investing
Okay.
comes early on in your investing career.
Okay, cryptocurrencies, yay or nay?
Yeah, of course.
Yeah. Okay. So your worst investment decision?
Worst investment decision was me putting almost 50% of my monthly pocket money, which my parents used to give me when I was in college, in Bitcoin. Because then the crash happened in 2019.
So you've been a
I've been a
Bitcoin,
victim.
you've
Yes.
been burnt by Bitcoin.
I've been. So that's the problem, right? When you get hungry, like I
Yeah.
put small amount, I saw it grow, then I put more and more,
Yeah.
and then it burnt me. It dropped by like 60, 70%. And then I never
Right.
told my parents. I had to kind of, eat less, order from outside less for the next 3-4 months.
All right. Your best investment decision?
I don't have one best, but I would say it's about more than investing in a particular stock or a mutual fund which gave me X% returns. It is about investing my time in learning about it for so long and choosing to spend my time with people who actually manage other people's money. That knowledge which has gained me, I think that is my best investment decision, because sharing that knowledge with other people actually also helped me earn more money as well.
Yeah.
So that was my best investment decision. Time management towards places to learn about money.
All right. And finally, Warren Buffett or Peter Lynch?
Peter Lynch, because most people make the mistake of picking the intelligent investor, and they
Yeah.
think that, okay, Warren Buffett wrote that, but he didn't write that, but people think that.
Yeah.
And they pick up that book, they read the first 4 or 5 pages, and they're like, this is too hard. I'm not reading this, because it's written a little bit in an older English
Yeah.
format, very technical. So I think that Peter Lynch's book, One Up on Wall Street, is a fantastic beginner-friendly book, and I loved it.
Yeah. All right, Sharan, thank you so much for your time. Thank you so much for joining us today.
Thank you.
And well, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we get you all the latest trends and what's hot. Welcome back. You're watching ET Now Hangouts with me, Ankita Saxena. Well, in the first edition of What's Trending, we bring to you something that has moved from tradition to a trend. Well, I'm talking about the rise of the bling culture and hip-hop jewelry in India. Now, with defiance at the center of hip-hop music, the genre with its direct storytelling has revolutionized the industry in more ways than one, with its influence being felt in the gully hip-hop culture that's thriving in our country. Well, another byproduct, or rather a symbiotic relationship that has evolved with hip-hop, is the jewelry. As hip-hop music grows in popularity in India, so does the demand for hip-hop jewelry. For years, international artists like Jazzy J, Kanye West, Drake, Post Malone and A$AP Rocky have popularized the iced-out jewelry. Back home celebs like MC Stan, Badshah, Honey Singh, Hardik Pandya and Ranveer Singh have set the stage for bling culture and hip-hop jewelry to make its mark on the Indian fashion scene. Taking the lead in the hip-hop jewelry scene is the Indian luxury jewelry brand, the Drip Project, which has become the leading player in hip-hop jewelry within the 6 months of its launch. Backed by notable investors and personalities like KL Rahul, Nikhil Kamath, Sunil Shetty, Robin Uthappa, Vivek Gupta and many others, Drip has a vast celebrity roster that includes Ranveer Singh, Karan Johar, Vicky Kaushal, Kiara Advani, Shubham Gill and Divine as its proud patrons. And today I'm joined by the man behind revolutionizing the hip-hop jewelry culture in India, Harsh Maskara, who's the co-founder and CEO of MetaMan and the Drip Project. Welcome, Harsh. Welcome to ET Now Hangouts. Well, firstly, Harsh, tell us about the traction and the growth that you have seen, since the inception of the Drip Project.
So, Ankita, since we started Drip Project in November 2021, hip hop jewelry was a relatively smaller space, and since then, I mean, hip hop jewelry has exploded all across India, not just metro cities, but even the smaller cities like even the tier 2, tier 3 cities. A lot of orders have been coming from there. So that definitely gives us a positive sign towards the growth in the hip hop jewelry space as well as the streetwear niche altogether. And I mean, the kind of traction that we used to initially have was we used to do about 20 orders in a day, and right now we are crossing about 100 orders a day. So that definitely says a lot about the traction that the brand has been getting in the hip hop jewelry space altogether.
Right. So what is the current market size of the hip hop jewelry market in India, and what is the market for opportunity? What is the headroom for growth there?
So in terms of the market size and in terms of the market opportunity, what I believe is streetwear in India came relatively very late, especially the hip hop jewelry segment. It has been there in the US and the UK since the last 4 5 years now, but in India it has recently started picking up. What I believe is there are a lot of homegrown brands that have already been doing well in the streetwear space, whereas in terms of streetwear jewelry, there are not really a lot of brands that already exist. So, as per my observation of the market, I believe in the next few years, this industry is going to be about $2.1 billion, and I believe from there on, it's going to grow further more and more. So there's definitely a lot of space that is there in the market for new brands also to come in and to start off. At the same time, there's a lot of market size which already exists for the brands that had started early on and are right now looking into capturing the market.
Right. So Harsh, speaking of jewelry for men with, luxury brands like Tiffany's, Gucci and even LV also, are coming up with men's line of jewelry, more and more men are also getting into jewelry. And, what is the kind of percentage of male versus female clientele for the Drip project? And, what is the kind of jewelry that men are really buying?
So I believe, I mean, as Stephanie has also come in India, there's definitely a huge space in the men's jewelry market that is there for sure. Because I mean, when all these big brands like Tiffany, Gucci, LV, all of them are starting their men's line of jewelry, that definitely says a lot about the men's jewelry, and everyone's betting big in the future on men's jewelry than female jewelry at present. What I also believe is right now our percentage of customers, percentage ratio of customers is 75 to 25, 75 male, 25 female. So I believe the trend for the next 5 years of jewelry is going to be huge chunky pieces of iced out jewelry. Bling is going to be the new essential in terms of everyone's accessories collection, right?
Right. Finally, Harsh, so amongst your celebrity clientele, which is a long list, who do you think has the best jewelry game?
Of course, it hands down it comes down to Ranveer Singh and Divine. These two guys have got phenomenal jewelry game. They can just pull out any kind of ice really well without, I mean, making it look too clean. Of course, in terms of the female side, recently we did a collaboration with Nora Fatehi, and she had stacked up a lot of pieces of jewelry, but it still came out to be really good. So I think Nora has got that jewelry game in the female side of the clientele.
All right, Harsh, thank you so much for joining us today on ET Now Hangouts. And finally, let's go and check out what's hot in the market. First up, hot from Milan is the Milan Fashion Week, where the iconic Italian brands such as Gucci, Prada and Versace, along with a host of young and upcoming designers, showcase the Spring-Summer 2024 collections. Naomi Campbell commanded the runway in a Dolce & Gabbana outfit. The event was graced by the biggest names in the business like Gigi Hadid, Demi Moore, Ryan Gosling, Julia Roberts, Emma Watson and many other stars. And these young guns have won major laurels for India at the Asian Games 2023, with Rudraksh Patil, Aishwarya Pratap Singh Tomar, Devyan Singh Pawar bagging gold in men's 10-meter rifles. The women's T20 cricket team also scored its first goal, and the dressage team from India won a historic goal, a first in 41 years for the country. Well, with that, it's a wrap on this edition of ET Now Hangouts with me, Ankita Saxena. Next time, I will see you with some more meaningful conversations and the latest trends.